Eric Moth with part 2 of the weekend of August 27th, 2016. Let's take a look at markets here. Just before the close, we are about 15 minutes before the close for the Friday's action, August 27th, 2016. So the market's coming off the lows, and I'll show you why I think if we take a look at the short-term hourly charts and stuff, it does suggest that the market is still healthy, irrespective of the volatility on Friday. As we discussed in part 1, some of the things that are holding are on the short-term basis, on the 30-minute and on the hourly. Market is holding for now. We have to assume that the market, at the end of the day, the market still remains healthy, which means we still have to be playing the market from a long side point of view. At least we have to be bullish. So let's take a look at the charts. So if we take a look at the hourly chart of the Dow to your left, we can see that the market is finding support A on this line that as we discussed in part 1, and also B on this line as we discussed in part 1, and that is good enough support, in my opinion, to justify the market being at least stable. Now, of course, we know that if the market was to break those two lines, then we can have a reason of looking at the market as being negative. Right now, this close, the market finding support in the last hour is very constructive. Take a look at the Dow 30-minute chart, and you can see the 30-minute chart finding great support on this RSI lows line. As long as that's the case, we have to assume that the market is finding support where it needs to. Take a look at the Dow Transports from an hourly standpoint, and it too is coming to test this RSI lows line, connecting the lows here, here, and now right there. We can also see this type of action. Take a look at the S&P 500 hourly, just like the Dow. It too is coming back and showing support on this line here, and also on this line here. In fact, you can see this clearly if we take a look at the S&P 500 30-minute chart, and all I'm getting at here is just the same point, because this held. In fact, if you take a look at this chart, you can see the market has hit this line on 3 occasions over the last 2 days, which suggests that that is solid support, and we have to assume that the market is still healthy. So that's why in this video you're going to find some ideas to be played with the expectation that the markets are going to be stable, and we can still be looking for bullish ideas. I would like to spend a second on commodities just because I should. Here we're taking a look at the daily, and as we discussed, I believe on Thursday, if we take a look at this line here for the GLD, draw a line connecting RSI lows, you see we are coming back here to test this level right here. So there's a chance this is where they might start finding support. This is the GLD. Take a look at the GDX. And the GDX, if you assume that this was a perfect entry on hindsight, and it is the correct assumption, because ever since this move here, markets come off the lows. Not only did we come off the lows, we went on a nice run. So we draw our uniformity line right there, and depending on how things go the next couple of days, if it can find itself back above that green line with uniform action, then that's going to be solid enough support. If we take a look at silver, SLV, we can also see that if you assume that this was the entry of the lows here on a daily closing basis, RSI moved above that range. We've never been back to these lows since then. There was a slight retest here, but for the most part we're higher. So we know that our line comes slightly above 30.9. We've hit this line once before for the lows there, and we are hitting this line as of Friday's session. So there you have it. it seems like around here they could find support. And if that's the case, then one can be excused for going long some of the metals. Now here's the way I look at it. If you take a look at the hourly chart, I would say wait for confirmation of strength. If the RSI can, for example, just move above this recent resistance line connecting recent low highs, just insist that it is above that line before you can go along some of the metals. That's just a little bit of a confirmation. You want to see confirmation because they could easily go back to test and not actually find support on the daily charts. That's silver. Take a look at the GDX. And what I would do here, if I was you, just wait for it to confirm strength by moving above this line. It's a simple line connecting recent RSI highs on a hourly chart. All we are saying is just let's insist that it is above this threshold or this resistance line, this trend line, before we can actually see any confirmation of strength. And I would also like to point out, since I don't talk about the MACD a lot, is because both MACDs are below zero, you don't want to give too much strength to this type of a chart. The best charts are where at least one of the MACDs at the very least is above zero. So we are seeing both MACDs right now below zero. That's a sign of a stock that, or an instrument that is not very strong. Again, the best way to approach this, because we are playing a pull, just wait for it to move above this recent RSI highs line, connecting the highs here, here, and here. Same thing can be said for the GLD. If the daily is to find support and move higher, the first thing it needs to do is just take out recent RSI highs like that. I guess we can do it that way, or even something like that. So you just insist that you want to see confirmation of strength by moving above that line, then you can go long. Otherwise, let's ignore trying to find a bounce in these instruments, because again, we've been looking at the monthly charts for many months and the monthly charts continue to be bearish. For those of you who are new, you can check out Thursday's video where I discuss why the monthly charts continue to be bearish for the metals. Because the market is finding support on the hourly charts and the 30-minute charts, here are some ideas going into the new week. Take a look at CYBE. Again, this is we are mentioning this one. I believe it's not the first or second time, but here we are seeing at the close of Friday, it is showing a good session to the upside while the market was generally struggling for the second half of the day. Here the stock is good as long as it's trading above 18.18, which happens to be this weekly close. So this is a buy right now, in my opinion. A little bit extended. Maybe you'd want it to pull back to the $19 range to at least give you that 5% wiggle room or range between 18.18. In other words, the window should be somewhere around here. Just about 5% above 18.18 is a reasonable entry range. So wait for it to pull back a little bit. Let's call it about $19. Otherwise, it still looks good in my opinion. Reason being that it meets the minimum requirements. As you can see, we have our RSIs, or our RSI on the monthly jumping above 69.1. And we got both MACDs trading at 3-year highs. So it meets the minimum requirement, which might be one of the reasons why it is acting well. So above 18.18, it's giving us another reason to go long. Keep in mind our buy point was on the monthly, just here, close to about 1750. It continues to trade above that, so it looks good. The other one is CCCR, and this is a speculative play. And the reason being that if you take a look at the monthly, let's take a look at the monthly. The reason why I even bothered to look at it is just because I don't want to ignore anything that is breaking out to all-time highs on the monthly. And the RSI, the MACDs are breaking out to all-time highs already. MACDs are at all-time highs and moving above zero for the first time on the small MACD settings. In other words, technically it looks good. I would use the recent weekly closing high as a speculative entry level here, as long as the stock is trading above $2, which is the recent confirmed prior to this week, is the highest close over the last couple of months and the highest close of this year. So above $2, the stock is giving us a buy signal. The other stock here is that is a buy, as long as it is breaking out, is LAYN. Doesn't look like crazy powerful on the weekly, but I'll show you the monthly. Now the monthly is right now pushing above this 2015 monthly closing high, and as long as it is breaking out on the monthly above 8.95, I would give it the benefit of the doubt. Reason being that it is pushing its RSI to 3-year highs, which is our minimum requirement. Keep in mind, it needs to be above this number for it to be confirming strength and momentum. Otherwise, if it moves back below, if any of the breakout candidates move back below their buy points, you want to get out of that trade because it is failing. So here you'd insist that it stays above 8.95. So we've seen the RSI move to 3-year highs, and also we can see that the MACDs did move to 3-year highs recently and again here. So it meets the minimum requirement. One of the reasons why I think it's one to watch, you can watch this, because should it move above 50, expect a relatively big up month. Now those are the ideas in terms of breakout candidates. Let's take a look at rebound candidates. We begin with YRD, which has been a recent winner and coming off the highs recently. You can see this thing, let's call it lows here of about $4, maybe $43, highs of 42. All this happened in 2016. So this has been an amazing moving instrument, but we've seen a pullback of strong proportions here from about 42 all the way to the current price of 22. That's a huge drop. Let's call it 50% correction. That's huge. All right, so now what we can do is see whether we can find an entry point off the high. So we want to play this from a rebound standpoint, and this is my reasoning. A, this is the breakout on the RSI that corresponds with this price move. Ever since that price move, we've been plugging higher. We can test that line to see whether the stock responds to it, and yes, it does. Here we have double bottom support in middle of May for this entry price, and it acted very well since then. We come and touch the same level here again for the lows there. We are doing the same thing here. So here's what we can assume. As long as this line is holding, the stock is set to rebound. And of course, as with any idea, you want to use your 5% stop loss, okay? So it's a rebound candidate. The assumption here is that it is gonna respond well now that it has come back to a level of finding support on its ideal entry point or entry level on the RSI. So this one is a rebound candidate. You want to buy it around current levels, set a 5% stop or maybe maximum 8% stop, and just see how it's gonna respond. The next three stocks are all from the same sector. I'll tell you which one I like the best just because. It is their three names: IBKR, Interactive Brokers, and I'm gonna go to long-term data. So here we see it looking at all monthly data, and the next one is AMTD, Ameritrade. And again here we are looking at the monthly chart going back to 06, and the other one is E-Trade, ETFC. All right, well, got that tick. ETFC. All right, so here's a E-Trade. Now I'm gonna just go back to the one I like the best, and the reason why I like IBRK or Interactive Brokers is a very simple reason. Of the three, it's the one that has had the biggest move recently. You can see relative to, for example, Ameritrade has had a relatively okay move, but in percentage terms, Let's go back to that Interactive Brokers chart. In percentage terms, this one broke out from about 12, went all the way to 46. Take a look at Ameritrade. We can say it broke out. Let's just give it somewhere here. At 18, went to 30, 38. Percentage terms, not that big. Take a look at E-Trade. Did not even move. So in fact, for the purpose of this video, we've just identified which one tends to move. So I'm gonna get rid of E-Trade, but before I do, the reason why I'm looking at this one is because it's coming back and showing support on its 50 RSI level on the monthly, double bottom support. That's why I think that as long as this is holding, it might have a chance of moving high. But I'm gonna at least consider the other two and tell you why I like Interactive Brokers. Of course, the reason being that Interactive Brokers, compared to the other two, has had a big move. Here we're looking at Ameritrade. It's also showing signs of a rebound coming back here. Keep in mind this was the ideal entry for this move here. Bam! And now we've come back. You didn't do this. I did not do this. The market did this on its own. So it found, in fact, we can even say triple bottom support on that green line and now pointing higher. This one is one can own and hold over a series of many months, see what happens. In fact, you can even argue correctly that there's another way of looking at this, which is to draw a line connecting RSI lows, and it is coming and touching that line. Let me take that off. Just again, the lows on the monthly also are connecting recently, coming back and showing double bottom, if not triple bottom support on this line. So both lines right now are in play, which might explain why the stock has been creeping to the upside. Now, I said I like Interactive Brokers better. Why? Because it's had a better run. Very nice clean action. And it too is coming back to test the ideal entry point. And we shall spend a second. So it broke out here in 2013, right there. And so it's coming back in essence to test that perfect entry. It is holding perfectly, I mean perfectly, above the 50 level and above the green line. As long as that's the look and that's the feel, this is one that could bounce. And there's one other way of looking at this. Take the lows, and without any adjustment whatsoever, you can see it connects nicely with the lows here, 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 and now this double bottom. So the chart by itself looks okay. So you can go long Interactive Brokers at the current price of $35 and change, 35, 33, and see what happens. I think as long as the monthly chart is solid and holding, as long as you set your stop at 5%, maximum 8%, you can own this and see what happens. Otherwise, this is how your markets closed for the Friday session, and this is how things settle out for the close of the week. Those are the ideas, and of course, as we begin the new week, we shall continue observing and trying to figure out what this always confusing market is trying to do. And again, as long as those hourly charts are holding, we have to give the market the chance to move higher, as it is holding on the short-term RSI level, suggesting it wants to move higher. Again, those are the ideas for you. We shall see how things go. Enjoy the rest of your weekend. See you in the new week. Eric Moather with Moather.com. Peace and blessings. Blessings.